What's going on, guys? Give me a 1 in the chat if you can hear me. If you can hear me okay. Can you guys hear me okay? Okay, there we go. Perfect. Okay, so this stream I really wanted to go over Friday's price action, how I knew we were going to have a rough open, pretty much at least up until 11 o'clock. Then we started getting some range, but I wanted to review today's price or Friday's price action and then review my trade that I took that morning, which is pretty much, in my opinion, the only good trade. I mean, unless you miss, I don't trade till 8:30 news, so we had the news at 8:30. But this is like really the only good, unless you took the, a long up in here, or this is a 5-minute chart. This move right here was what I took, and I'll show you my executions and all that. But first, I'm gonna go over how I knew where my draw on liquidity was and how I knew we were gonna open up choppy. So let's start on the daily chart here. So I kind of knew that, we're going to head lower. I mean, these past 3 days, you saw it, and I'll go over why my bias was that. So let's do this. Let's just hide. Actually, let's just do it on here. So you have this balanced price range right here, right? Oh, sorry. Hold on. Is it daily or weekly? Yeah, weekly. This fair value gap right here in the weekly chart. And, everyone thinks that, this is a breakout, right? But we're fading that. And I think I probably should go on the ES1 chart just to show you. It's more continuous. There we go. So I always start out on the weekly, and you want to look at, weekly, then daily, then monthly. This is what I was looking for right here. So you have this balanced price range, okay? Or BPR. And so everyone basically is thinking we're breaking out, retail. Oh, we closed on the weekly above, we're breaking these highs, there's resistance. But what we see is a double top, right? And so we're gonna attack that. And they think we're breaking out, but what we're doing is grabbing buy side. And so you have this BPR here. You have a nice mean threshold of this order block, right? And you see like we hit that mean threshold, which is that line. I can change the color to red. So this is what smart money sees. Retail thinks we're breaking out. We're fading that, obviously. So we take out liquidity above these equal highs, and we're hitting this BPR on a weekly bearish order block. Hit 50% mean threshold of that order block, and look at the reaction there. Hits BPR 2 more times. You can get on the daily if you want. Hits it. That's the highest we ever go. Hits it again, and then sells off, right? And so that's, in my book, a market structure shift on the daily. And so we had it on this day here, Thursday, came back up into that fair value gap. In my opinion, that would be IOFED, institutional order flow entry drill. Didn't even hit consequent encroachment, right? Sorry if I'm going fast, let me know. We'll go back through here and I'll answer your questions. So my bearish on this day, right? I'm bearish on this day because look at the reaction. We hit up into it, come back out. So when we don't even hit consequent encroachment, that's a pretty bullish sign that, we're going to head lower. Sorry, bearish sign, not bullish. So I'm going to take you, and that's basically where I start my analysis, is on the weekly. So we were expecting lower prices after taking these highs. So I'm going to take you back to the actual contract, and we'll go in on the 1 hour. And so you have Wednesday's price action, Thursday's price action, and I recommend you guys all do this in month 1 core content, ICT. He goes over having a new week opening gap chart, right? So you could see Thursday morning, we're hitting this new week opening gap from all the way back of, I guess, was that? Yeah, January 13th. Small gap, but look at the role it plays, right? We hit into it here, 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 here. Hit into it here and run through, right? Look at the reaction on there. It comes back up, goes down, hits it here, here, here. So you see these things are playing a role, even though they're weeks back. So that's why I always keep at least the last 5 gaps on my chart. I think he recommends the same. So I have, an opening gaps template saved, right? And then I also have a daily high and low template saved. That's on the 15-minute chart. And so what I do is I section off each day at midnight. And at the end of the day, I mark the highs and lows. And so you can see after coming down off that big move right here, this big move, we've entered into this big search and destroy or range expansion model, whatever you want to call it. Seek and destroy. And so by the time here, we're hitting that new week opening gap, because remember, there's a gap right there, see? And so it's so easy to switch back and forth between these two. So there's a gap there, added confluence, and we're in the seek and destroy. So I'm thinking, okay, I wake up around like 7 o'clock, so I don't even sit down at the desk until like 8. And so we're basically down here by the time I sit down, and I'm thinking to myself, okay, it's obvious we're going to go out and take out the daily's low, this low at news. And I'm not trading the news, right? I don't want to gamble. So what I'm looking to do is I'm looking to see when news comes out at 8:30. Let me pull up Forex Factory here. When news comes out at 8:30, right? I'm looking to see, we have PCE, core PCE. Does price go down and take that out? And so the fact that we took out this low, right, the previous day's low, before 9:30 open, that's a good sign that we're going to have chop that AM session, because the sell side objective has already been met before equities open. And so that's why I tweeted out that morning. I said, careful, if we take out this low, you could have a bearish AM session. So just stay cautious. And so I always drop down from the 1 hour. Right, so we took out the daily low. I'll go ahead and mark that out. It's probably just easier if I just do previous day's low. EDL. So we come down, take that out, right? And then this sell side level is all the way back from this swing low on the daily chart. And so you're also hitting, there's a fair value gap here, right? And so my downside objective was, once we take out the previous day's low right here, does it want to reach down and take out this daily low right here? And if it does, we could probably go down and fill in that daily fair value gap, which is my final downside target. So FFD1, that just stands for fair value gap fill daily, or 1 day chart, right? So look how it respects it right there. It's just crazy. And you can go back and look at the tweets. None of this is hindsight. I'm gonna go take you back to the 15-minute now. So that was my target, and that's why I was expecting some chop, is because we've already met these objectives. Because look where 9:30 opens. 9:30 opens on the 5-minute right here. Make this red and big and bold. 9:30 open is right here. Okay, so we've already taken both these objectives out, right? But right here, it honestly looks like it's support. So it takes it one more time, right? And so a lot of people, they're DMing me asking, why didn't you think this was a breaker, right? Why didn't you buy this right here? And I almost did, because, you have, for those of you who don't know, breaker's when you have a swing low, right? High, lower low, and then it pushes through that high, and that's automatically considers this candle a breaker, bullish breaker. But the thing is, yeah, it's a shift in market structure, but I'm looking at it as an inducement, because first of all, you have this balanced price range. Balanced price range right here, because the price goes down, up, down. So that's balanced. Look how it respects that, right? So let's make that red. So it's respecting this, right? It's not really respecting consummate encroachment, but what I'm looking is, does it displace, right? There's not really any displacement on the 5-minute, because I'm using 5, 15, and the hourly, right? Because my charts look like this: hourly, 15, 5, and then I'll use the 1 minute. and we'll narrow in on this big screen here. But this isn't really displacement because what does price do right when it takes this high? It comes right back into the range, right? It comes right back into this range right here and goes lower. And so for me, this wasn't a deep enough run below this sell side level on the daily chart, right? It wasn't a deep enough run below this low. And I wanted to see a big move. And so that's what you get right here. It tripped a lot of people up too because they thought this was a shift and they were trying to buy this breaker. But what you got to do is you got to go on the smaller time frames and look and say, okay, are the PDRAs, the bullish PDRAs, supporting price? Okay, and people were trying to buy down here, and I was looking to see if we support. That's why if it's not a high resistance, if it's not a high resistance liquidity run, and it doesn't match the higher time frame order flow, which has obviously been bearish this whole morning, right, up into this move, you want to see, do PDRAs support price? And so right here you have a bullish order block right here. And so you see price comes in, right? And we have mean threshold, this order block, right? It stays above, but then price, cuts through that and breaks this low right here. So there's another shift on a smaller time frame. So we're not really respecting this breaker. There's a fair value gap here that it closes below. I can draw that out too if you want. I'm sure you guys can see it. But it's failing this fair value gap here. So that's a sign to me that we're weak, right? And the market's heavy. So this could have and this is all happening in real time. This is all hindsight right here, but I'm still looking, does this support price? Does this support price? And, he famously says when 3 PDRAs fail, right, it's a good sign that we're going to head lower or we're going to head higher depending on your bias. And so when I see this fair value gap fail and this order block fail and there's a volume imbalance here that fails, I'm thinking to myself, okay, this is probably just a liquidity grab because if you look on the higher time frames, all we did was grab the liquidity right here above this high and come back into the range. So, and I was already looking for, a deeper run into the sell side. So that's why I didn't take the long there. But let's go into why I took the short. And so what I'm going to do is I'm going to move my screen out the way because I got to log into my broker real quick. Let's see. And it'll show my balance, and I'm not trying to show all that. Okay. So I'm logged into my TradeStation account, and we'll show my executions here. Okay. And if I'm going fast, I'm a fast talker, I know. But I want to get through this. I don't want it to be too long. I want this to be like an hour. I don't want to take too much of your time. And so you can see, obviously, this isn't Photoshop. This is all real time. It shows you where I got out, where I got in. I can toggle it on and off. And so I'm looking, okay. I'm thinking, okay, well, if it doesn't want to go higher, we're going to go lower. So what's the next objective? We already took out this daily swing low. So we're probably going to fill in this fair value gap and hit this bullish order block. And so this is my draw on liquidity for the rest of the morning. And so you see we stop short of it, right? Let's see, projections, there we go. Look, we stop short of it right here on this projection. See the bodies, don't really care about the wicks. The bodies are respecting this right here, and we head higher, right? So I'm looking to see, can we get back to premium? Can we get back to a premium? I can probably just make it colorful, sorry. I have a really high resolution monitor, so it might be hard for you to see, but see, can we get back to premium so I can sell short? And we do. And so you don't, yeah, we have a big fair value gap here, but you don't want to sell anything, in a discount, right? And this is also a bearish breaker because you now have a high, a low, and a higher high, right? So this is now a bearish breaker when it comes through. And that bearish breaker creates a fair value gap right here, which is this red area right here. And so I'm just gonna take my executions off for a second. Look how perfectly it respects that fair value gap, right? And so I'm looking to see, can we hit down to first objective, this fair value gap on the daily fill, and then if it wants to go any further than that, it can go down to the 1 standard deviation right here, and we get close, right? But it was a choppy morning, and so what am I looking at, to place my entries? Well, obviously, if you don't have any patience, you're not going to be able to sell you're gonna take the early entry, which is nothing wrong with that, right? But if you enter right when it hits this fair value gap here in this red, your risk reward is going to be so skewed because you're either going to, if you want to be safe, put your stop loss above the swing high, or maybe, mean threshold of this order block here, or you could use the consummate encroachment of the wick, whatever you're comfortable with, right? But look at that. It's not even worth taking. Even if you just want to take out the swing low, it's not even a 1 hour trade. So you have to be able to be patient. And on these smaller time frames, look how messy this is. Like, so I bet so many people were trying to sell short in here, and then it takes them out, right? And then heads lower. I'm waiting for it to come up into premium, as you should be too, because the algorithm likes to sell in a premium and buy in a discount. So I'm looking at things like premium discount, optimal trade entry, but also what I've been using a lot to get in. Oh, I see you bulls. Hold on. I'll answer IOFAD and FEG after this. I'm gonna go over my executions real quick, and then I'll answer your questions. So, what am I looking? What made me get in like at the exact price I got in at? Well, when you zoom in, right? This is why you don't get too sucked into the smaller time frames. You have a volume imbalance here. Let's say without VI, and you guys know this is a fair value gap right here, so I'm just gonna delete that. Volume imbalance here. Breaker here. So inside this breaker is a volume imbalance right here. Put that at the bottom. And so I'm looking, there's a fair value gap, a breaker, and a volume imbalance. So we have all these confluence points, and we're hitting a premium compared to this swing low, swing high. So I can sell short up here. And so what do? Let's go to my executions. I sell at 39.65 even, right? Right there. Let's click on this. What's the low of that volume imbalance? It's 39.65, see? Or I guess you could say, what's the close of this candle right here? Right up here. Look at this price, 39.65. So I put my limit order right here. I hit trade, sell one. Or I guess, I don't know why I can't do. I guess the market's not open, so I can't actually. Doesn't look right, but I'm setting a limit there right when price hits the volume imbalance, right? So when it trades into it, I'm getting filled right there. And my stop was above these 3 candles, right? Because this whole thing is the breaker, right? Because it's just like an order block, right? The series of candles. So my stop, right? So if I'm getting in here at 365, my stop was above the breaker right here. So 4 handles. And I'm targeting. Well, I was originally targeting, my price target down here is the fair value gap fill on the daily. But what I'm doing is I'm taking partials after this swing low right here, because price goes up, down. And so everyone's going to want, if they want to go long, are going to put their stops here. So you're going to target that low. So 1 tick below that, a 3.25 hour trade. And so you can see I sold right when we broke that low, sold half my position here at 39.5225. Right there, see? And I actually sold, I guess, 1 tick below that. So yeah, 39.52. So I put a buy limit there, tick me in, and then you see we start chopping, right? And this is where I got kind of frustrated, and I probably should have just cut the trade once I realized it wasn't going anywhere. But let's go on the smaller time frame, and you'll see. That's why it's important to zoom out. Probably easier view for you guys. But isn't it the best feeling ever when you can like top tick like that? But you wouldn't have known that volume imbalance was there unless you were zoomed out on the 5 minute and then narrow in your entries on the 1 minute. And so I'm looking, does price, right? There's a fair value gap here on the 1 minute, doesn't even hit into. So my stop was it 69? So here's my stop, right? And it's above this fair value gap here as well. So even if price wants to come up, it's gonna have to go through here and this order block right here. These consecutive candles is 1 order block. It's gonna have to come through this order block here as well. So my stop's protected. I have a lot of PD arrays in between my stop. It's not too tight, and that's something I've been working on. Let's see. Hannah says on your daily chart, would there be a way to know that the candle on Friday wouldn't have gone to the CEO of the FEG? We can go back and look at that in a second. I'm gonna cover the rest of why I got stopped out here. Adam, you guys keep asking your questions in here, and I'll get to them one at a time. But first, let me just go over this last exit. Okay, breakaway gap 2. We'll go over that as well. So I basically trailed right here, right, when we broke that low. And then what I did was, when I saw that price came down and, and they were teasing me right here, look how close we got to my target before stopping me out. We start chopping, right? And so when I see price doesn't want to take this low, that's a double bottom. And so, okay, well, they're not going to leave that alone, are they? Retail's buying that support. But we also left, liquidity here and here. And so I ended up trailing my stop. Because I knew I was wary of a choppy morning. I ended up trailing my stop here. Right? And I got stopped out after putting it above the swing high. And look what it does. It hits it, then goes lower. And by this time, I had just said, you know what, screw it. I'm not trying to get the exact fair value gap fill. I'm just going to put it below these lows. And it ends up stopping me out, taking those lows. And then, we head higher, take out these relative equal highs now. Take out these highs. And then it heads lower again. So it was literally search and destroying everybody. And after I got stopped out here, I said, I'm done. I got my money for the day, even though it wasn't the final price target. You live and learn. But I pretty much walked away after this because, it was just pretty much chop until about 11:30. And we finally got some nice movement, but it wasn't the cleanest either. So I was glad I sticked out and went to the gym and did all that. So that was what was going through my head on this trade right here. If you have any questions about it, we can go over it. But I'm gonna start answering some questions. And Cryptologic Bulls is asking, what is IOFED and a fair value gap? So let's go back to. I can find an example. I can honestly probably just find an example in here in the 1 minute. But basically, IOFED is when price. I can find an example. I guess the daily was the best example. So when I posted that pic of the anatomy of a fair value gap, right? You have. I can probably just do it with lines, couldn't I? Delete all this. So you have the fair value gap, right, that everyone knows. IOFED is basically, there's high frequency trading algorithms that will hammer, right? And this isn't really the best example because sometimes it'll just go in by a tick, right? But this is the daily chart. So I could probably find it on a smaller time frame. But IOFED is basically when price only goes into a fair value gap by a little bit, right? And like I said, this is the daily chart. It's not the best example, but the fact that we didn't even hit consequent encroachment, which is 50% of the fair value gap, is a pretty bearish sign. And so he also splits down ICT. You're supposed to split it into quarters as well. So let's make that blue. There we go. So you have 3 parts, right? You have the low and the high, the fair value gap. You have the bottom 25%, consequent encroachment, which is the 50%, and the other top portion right here, which is 75%, and you have the 100% fill of the fair value gap. So institutional order flow entry drill, or IOFED, is when price will hit into the fair value gap and either not fill it all the way or just brush the top of it by one tick, a couple ticks, and then head lower. And so that's basically high frequency trading algorithms are selling short as it's hitting in here, and it's not going to have a chance to come all the way back up and fill this in. So that's institutional order flow entry drill. That's the simplest way to put it. And you can see, actually, we respect the bottom 25% of this fair value gap right here, and then head lower. And so these are all things that you have on your daily chart, right? Because it's easy to get lost on the higher time frames or the lower time frames. If I go on the 15-minute, you can see, right? Now you see these big levels that are transposed from the daily over here. We come up into the bottom of it, hit the bottom 25%, and tank, right? So that's a good sign that, yeah, we got the, this liquidity void down here. We're going to come rebalance all that, or reprice into it, sorry, and then rebalance it as we leave it. But that's what IFED is. And you can find really good examples on the smaller time frames. Like I said, the daily chart's not a good one. I just use it as more of a visual example. Does that answer your question? If not, let me know. And I can go over and find some other examples somewhere in here if you want. We can find some examples in price action. Give me 1 second. Take a sip of water. If I'm talking too fast, let me know. But this is recorded, so you can go back and watch it at your own speed if you want. Hannah is asking, let's see how many. Hannah says, on your daily chart, would there be a way to know what the candle on Friday wouldn't have, or wouldn't have known that the candle on Friday wouldn't have gone to the CE of fair value gap? Okay. Yeah, like I said, you would want to mark out the anatomy of the fair value gap, right? So it's not just CE and high and low, it's the corridors as well, these blue lines. And so when you see that, you also have, I guess you could call this a breaker as well, right? Look at that. Let's make that purple. When you, because think about it, what happened here? You have a high, low, higher high. So this is technically a breaker, right? And it also grabs liquidity above these highs right here. Relative equal highs. So, and then when you start getting to the weekly chart with the BPR and that I showed at the beginning, and that's the narrative, right? We're going lower. And so now you have this PDA right here. Once we break this low, it's now considered a breaker, right? A bearish breaker. So price comes down, hits the 25% or the bottom quarter of this fair value gap, and hits this breaker, right? Last down close candle before moving higher. This is now a bearish breaker. And so look, hits that, right? And it lines up almost perfectly with the bottom 25%. And then tanks down. So that's a clear sign that on Friday, we're probably not going to go back up there and revisit that. And if we had, right, and like I said, I don't trade, the Asian session. It's just sideways. I don't really trade London because I'm not up enough. I woke up when price is down here. So it was pretty clear to me before the news, before these two candles right here, the drop lower, it was pretty clear that it might want to come back up, could have tagged into here and done something like this, gone lower. But I mean, 830 is on right here at the open of this candle, right? Here's 830. So it already moved down lower and price was not being supported by these fair value gaps, right? That are in discount. See, we're below the 50. So it's not supporting it. You can actually drag these out and use them as resistance if you want on a lower time frame. I'm sure there are a couple that line up. But yeah, that's how I kind of knew that, you got to work out on our high time frames and then work in. Like my morning routine, I always start with the daily, mark out the daily, objectives, potential draw and liquidity, above and below, right? Because if I see something on a lower time frame that I like, at least that, now I have the higher time frame points of interest drawn as well. So I mark out, the daily lows, previous day's low, this low over here, and this fair value gap fill / bullish order block as well. And so you can see when we hit that fill of fair value gap in the order block, we now reject off of that. So I hope that answered your question, Hannah. Adam is asking, how do you determine what the real draw on liquidity is? I keep thinking every time price takes liquidity that it will flip and go the other direction instead of going after the bigger draw on liquidity in the same direction. So that was a big problem for me too. When I first started, I was always looking for price to take external liquidity then immediately reverse, right? And the trend days when I first started out were really hard for me because it's like, how can I get on side on these big trend days where it's down, or like a day like this where it's, just straight up, or with barely any pullbacks, or maybe it is like something like this where it takes out a daily high, right? Like it acts as resistance and then muscles through it. and then comes back down, and you think it's going to reverse, right? But then it just keeps going. So that was something that I struggle with as well. And some tips I have for that. Let me clear my chart off real quick. So some tips I have for that would be, like I said, you need to look and see when we take out a low, like right here. We took out the previous day's low. Does price want? Okay, crypto. CE of a fair value gap is just the 50% of a fair value gap. It's just the 50% level. So when you're bullish, you want to see price pretty much stay in the upper portion, come down, if at all, come down, maybe hit CE, and you want to see the bodies respect and close above CE, and that's very, very bullish for price to continue higher. So to answer your question about the, on trend days or, seeking liquidity, like this is a good example where you might have thought, and that's why a lot of people were in my DMs when they saw me post my recap of shorting here. Like, why didn't you buy that breaker? And it just goes back to looking on the smaller time frames, right? So we took liquidity, which is this line right here. Does price want to, are bullish pre-D arrays supporting price? And if they aren't, remember I was going over this on the order blocks right here. The order block is neglected. This very value gap is not supporting price. It just goes right through it and closes below. Same with this order block right here, right? You can see it originally supported price right here. Look at the bodies, and then goes higher. But all it's doing is inducing traders to go long out of here because their stops are going to be here. It's just grabbing their stops and also trapping long. So you want to buy the breakout right here, and it's taking them lower and drowning them. So you can see maybe like you might see this candle and say, okay, it's we didn't respect this fair value gap. So the boom, that would be something that, okay, we didn't respect the value gap in this candle. So we head lower. Is price being respected here on this order block that was originally respected before? Yeah, kind of is, but it's also rejecting this fair value gap now, right? So this fair value gap is not acting as support, it's acting as what? Resistance. And so what we do is we call that an inversion fair value gap, or it's inversion, right? It's now basically a discount PD array, right? Because price is above here. So it should act as support if we're bullish, is now acting as resistance. So a discount PD array is now acting as a premium, meaning you can sell into that. And so if you really were aggressive and you thought this is just a liquidity grab, turtle soup, which I'm not the best at spotting, you honestly could have just sold as price, closes below, comes up and hits it, and you see it goes lower, stops, and then tanks. So you could have, if you really wanted to trade this turtle soup for confirmation, wait for price to close below here, come back up into this 1 minute candle, hit it, right? And then take it lower down below. You can honestly call these relative equal lows almost if you really wanted to. Like, it's kind of subjective, up to you. But that's why we use the fulcrum price targets, right? The projections. You could target here, but how much farther can it go? Down to the standard deviation, right? And so you would take it off here, look at that, stops, and pretty much closes above after this candle right here. Look at that, respecting it to almost to the tick. So that's basically what I'm doing. I'm projecting, right? I'm looking to see how much farther can price go. Is it worth the trade? Like if I bought in here, this is all hypothetical. I didn't do any of this. Stop above the high. Taking out the low isn't even a 2R trade, so I couldn't take it. But if I want to target this projection down here, it's a 2.3R. So I would have to hold for that, or at least a minimum of 2R, which would be right here for me if I entered right when price hit this fair value gap. So it's all about measuring and making sure you're taking good risk reward setups. But that's basically what I'm looking for. Does price want to take liquidity? Like Adam's asking, does it want to take liquidity in reverse? Because look, it acts like support. It's tricking people, and then it dumps lower. And so this move really stumped a lot of people. Almost stumped me. But I've been working on waiting for the opening range to be set, waiting 30 minutes after open, right? Because 9:30 was right here. So I want to wait and see. Let the opening range be set. And so by 10 o'clock, we pretty much had it set. And look what happens right at 10. Price comes up. What is that? It's the 950 to the 1010 macro. Where is the 1010? So between this period of time, there's a macro, a 950 to 1010. What's in here? Well, we come back up, like I said, into that 5-minute breaker that I entered short on. Right here. Come back up into there. And that volume imbalance. I'm not going to draw it super clean, but that's basically it right there. And that's all between the 9:50 time and the 10:10 time. So I'm looking. It's all about time and price. And we have these relative equal lows. And we have that daily fair value got filled that was like 39.48 level, basically. Maybe a little bit higher. So yeah, that's how I determine if price is going to reverse or if it's going to keep going in the direction it's going. I hope that helps. Let's see. Hannah is asking about the breakaway gap. Okay. Let's remove all this real quick. Breakaway gaps happen all the time in the 1 minute too. And people always are asking, like, how do I know when a gap's likely to be left unfilled? How do I know when price is gonna, give me an entry to go short again? And you got to remember, I have a video of me in real time showing a breakaway gap form, and I say I don't want to see price return back to here, and I raise my stop right below the gap, and price never comes back in and takes it out. So like obviously here this would be a breakaway gap, right? And so you got to think about what a breakaway gap is. Like, what is a breakaway gap? So think about what price is doing, right? There's basically 4 conditions that price is in. There's actually, I can just find the image online. Look, just like ICT price delivery. My internet's slow because I'm streaming. Here we go. Let's copy this. There's 4 things price can do, right? It can be, it always starts in consolidation, right? So price is kind of consolidating in here. But you want to ask yourself, in this scenario, right, what is price doing? Well, it was consolidating, right? And it's kind of expanding, right? But what is it expanding into? It's going to take out this high. In hindsight, we see that. But, and this will be a turtle soup entry, but it always goes from consolidation to expansion, right? It's never going to go consolidation reversal because it's just sideways, right? It can't reverse if it's just sideways. So it's always going to go consolidation to expansion. And so you kind of have that, right? And then it expands to this high, and then it reverses, right? So expansion reversal. And so once we reverse, right, it's not going to, or I guess you could even call this a pullback, a retracement, right? In higher time frames on the 5 minute. It's all about what you're looking at. You don't want to get too lost, but right here, we're kind of consolidating, right? And then we have a retracement, right? Takes out this high. People who trailed their stops too close, who were short, are now stopped out. And from this retracement, we now go back into expansion again. So it's just like an uptrend, right? You have expansion. Before that, you might have some consolidation. Sorry, it's kind of sloppy. Consolidation, expansion, retracement, expansion. So that's basically what we have here. It's just to the downside. So you have right here is your expansion, retracement, expansion. Doesn't that look similar? You need to drag it over. See? Match it up. So that's what you have to keep in mind. What is price doing? What stage is it in? And right here is retracement. So what was the question? Sorry. The breakaway gap. Okay. And so you got to remember, once it's retraced, what's it going to want to do? It's either going to expand again, right? Oh no, sorry. I think it only can go from consolidation, expansion, retracement, expansion again, and then from expansion it can go back into consolidation, or it can reverse. Okay, or it can keep retracement, expansion, retracement, expansion. So in this example, it retraced, grab liquidity, right? And so it's not gonna, the people who are going long here, it's not gonna want to give them a chance to get back break even, right? So they're setting their orders. Breakout traders are setting their orders above this high. and they're going long. They're putting their order right here. There's literally people who trade like this. I used to trade like this. No, I'd see it all the time in these discords. People are setting their orders here. They think that's resistance. When price breaks here, they think it's going to keep going higher, right? V-shaped recovery. Because they view these levels, these higher time frame levels, as support. You know, previous day low. Remember? Previous day low was, delete this, right here. Right here. Right, so maybe they're thinking, okay, well, you know, this is kind of, you know, in support area on a higher time frame. You know, I'm gonna buy, right? Or they think this is a double bottom. They're gonna buy the support. So everyone's trapped right here on this move, and price isn't gonna go from retracement, right? And then as it goes down, we call that, you know, continued expansion. It's not gonna go from retracement expansion. It's not going to go, sorry, it's not going to go retracement reversal, right? It's going to go retracement expansion. And it's not going to want to give these people a chance to get back and offset their position because they're underwater now. So like this is a harder example to show right here. I think on one of my videos, like here's a good one actually. This is a better one. Even though it's choppy, like these gaps right here. Both of these. Right? This is a better example. You have your consolidation. Okay. Let's make this gray because nothing's going on. Boring. Then you finally have your expansion, right? And you have a retracement here, retracement here. And so this, I would call this, let's do expansion. Retracement. And then price expands again and takes out this high. So let's say that's the draw on liquidity, right? Buy side. Can you guys see this? If it's too small, let me know. I can make it bigger. Okay. Expansion, retracement. And so what's it going to want to do after it retraces? It's going to want to expand. This is also kind of a little consolidation as well. But what's it doing? It's really retracing lower to let smart money accumulate. And so you have a fair value gap here as well. You have this order block right here, the supporting price. All right, so you have all these things, and there's a volume imbalance here. I'm not going to draw every single little thing out. You know, you have an order block here as well, a little 1 minute one. So this whole move and this little block here is an order block. And so price is basically consolidating, retracing, and then what does it do? It's going to expand again. So it's not going to come back. It's not going to go retracement, expand a little bit and reverse right back into these fair value gaps. It's going to leave this area with speed. And that's what you want to see when you're in these, when you're buying off the order blocks. You want to see it leave with speed and leave some breakaway gaps. That's how you know you're in a low resistance liquidity run. When these gaps form, when price moves with speed to the level you're looking at, right? The buy side. Because what did everyone do when this move happened? They probably trailed their stop above here. So it comes up, takes out their stop, and when you zoom out, and it comes back down, back into a discount. Back into a discount, right? And then goes higher. So that, and then takes out this high. So like even the same thing can be said, like it's just fun to go through price. Like if you wanted to look in the morning, you got to keep in mind this image, right? What is price doing? What level is it in? You don't want to be trading in consolidation unless that's, you know, what you're good at. I'm not good at that. So I'm looking to catch these expansion moves out of consolidation or continuation moves off of a retracement or reversal, right, after taking liquidity. Those are where the money's, that's where the money's made. And I'll write something out. Here you go. Let me make this big and bold so you see it. Yeah, that could be considered a market maker model. Like this would be a buy model right here. right? Those V formations you see, like this is a good buy model right here. You have the sell model, smart money reversal, right? And then you also have this breaker right here. Because you have a low, high, lower low. It gets taken out. So these X's are, right? Grabbing liquidity. That's what I use it for. And then it goes up above here. And you see how price, once it breaks this high, is now supported by it. So yeah, that's what a breakaway gap is. And like Friday's price action isn't the cleanest. You know, it was a choppy morning since the objective was already met in the London session. But that's the best way I can explain a breakaway gap. And I'm gonna put a link in here in a second. I'll go ahead and put a link in actually. I sent it to, I think Trader Day had a good video. Actually, no, I DM'd it to one of my friends. Let's see. Here you go. This right here. I'm gonna put it in the chat. This is ICT from, you know, himself explaining it. It's a quick little clip if you want to watch it after, or you can watch it right now. Mute me, whatever you want to do. It's him explaining, you know, why certain gaps get left unfilled. He can explain it better than I can. I'm basically just repeating what he says. Okay. So we answered the breakaway gap. I answered the IOFED FVG propulsion block. And also, can a breaker also be an order block? Let's see. Propulsion block, can a breaker also be an order block or just what you show? Okay, so a breaker, I think ICT also confused a lot of people on this with his live stream the other day. But remember this quote, right? This is also what I wanted to touch on. Opportunity lies in the change in the state of delivery, right? So when we're changing in these states, right? When we're going from consolidation to expansion, price is being delivered in these conditions. So if it's just sideways, you know, I don't like trading that. But when price changes from consolidation and moves into expansion and starts going higher and higher or lower and lower, that's where the opportunity is made, right? So whether it's a reversal, whether it's, you know, a retracement and then another expansion, right? That's where the opportunity is made. Like right here, even on the 5 minute. If you wanted to get in right here, what's happening right here? On a higher time frame, sorry, do order block. On a higher time frame, this is a consolidation right here, right? Little seek and destroy. Seek and destroy, it's consolidating. Expansion out of that range. Retracement back into that range, hits this order block, right? And so it goes from retracement, expansion again, and then takes out this high. I know we're zoomed out, but that's what it's doing. Consolidation, right? We just went over it. In this box is consolidation. Expansion out of that, retracement, right? And this could also be a reversal if you're on a 1 minute, right? It all depends on what you're looking at. You got to zoom out. It's fractal. It works on all time frames. Retracement, expansion again, or reversal if you're on a 1 minute and you want to, you know, you're super zoomed in because this looks like a buy model, right? So that's what we're looking at. And even on the smaller time frame right here, you have consolidation, expansion, retracement, right? And the change in the state of delivery would be moving from retracement to expansion again. And so you want to get in where that state of delivery changes. And these order blocks are like bookmarks. Price leaves it. When you put down a book, right? You're reading a book and you want to go put it down. You have to do some chores. You have to go walk the dog. You have to go cook dinner. What do? You put a bookmark in the book so you know where you left off. It's the same way with these order blocks. Price is going to leave and it's going to want to return back to that page or that price level, right, in the book. And then it's going to pick up where it left off. It's going to go from retracement to expansion, right? It's going to go from page 3 to page 4. And so that's all we're doing, right? And so when you view price like this in these terms, right, it'll keep you from trading in stuff like this, right? No one wants to trade in this. That's why I got chopped up. I should have just taken my other partial, you know, when I realized I was in this. But when your emotions are running, right? when your motions are running, it's hard to see that, and you really have to zoom out and see, okay, what are we doing on the 5 minute? That's why you don't want to sit here on the 1 minute chart, because everything looks like a shift. Every single thing looks like a shift, and you're going to get chopped up. You need to be on the 5 minute and see what the overall price is doing. 15 minute, 5 minute. I started using the 1 hour instead of having the daily there. I'll put the 1 hour and the 15 here, and I'll have the 5 minute here. And then on this chart, I'm using 5, 4, 3, 2, 1, and I'm finding, my entries and exits. So I hope that helps about answering how do you know if price is, gonna continue? You always have to ask yourself, what is price doing? How is it being delivered? And so that's what I do when I'm trading, and it helps a lot. But just remember, these are like bookmarks. These order blocks are like bookmarks. You see price likes to come back and retrace. And just remember also, you don't want to be buying in premium, right? You want to see price come back down into, into discount below the 50. And you want to be getting in at these PD arrays. And like, look at that. You can't tell me that that's not sexy, right? Can't tell me that's not sexy. So, okay, let's keep going through questions. I don't want to do this for too long, but I want to make sure everyone gets their questions answered. Abbreviation for IOFED. IOFED is just institutional order flow entry drill. CE is consequent encroachment. PD arrays is just premium discount arrays. That's it. You can just go Google it too. I'm sure there's quick little explanations on Google. Let's see here. What's up, Adam? Sorry, I'm going through the chat, top to bottom. Is this Adam Prince in the house? Adam Prince? How many people we got in here? We got 31? Okay. What's going on, guys? If you missed the beginning, don't worry. It's recorded. All we did was go over how I knew price was going to be choppy after taking out, or in the AM session after equities open. And the main reason was because we had already completed the sell side objective before equities open at the at 8:30 right here when the news hit. So once we hit that news and the equities opens at 9:30 right here, price is really sloppy, right? And there's some nice range, if you can get in at these levels and have the patience. But this is the 5 minute chart. If you're on the 1 minute chart, you could easily get wicked out right here if you're short. Look at these bars. It's just a barcode. It's just gross. So. Let's see. Check the M1 on the order block line you have. Which order block? You talking about this one? Like if you want to narrow in entries, right, you got little tiny fair value gaps right here, So it's all about, if you want to reduce risk, you could, instead of putting your stop down here, maybe you want to take an aggressive stop and you want to get it on the order block open, put your stop below this candle, or even this candle, right? This creates this tiny little fair value gap right here. Put your stop below that candle's low, right? So one tick below that. Now you have a target this high. Now you have a 12-hour trade, right? Or you could just put it down below if you want to be a little bit more conservative, or below this order block right here on the 1 minute. Okay, or mean threshold of this 5 minute order block. It's all up to you, right? No one's gonna push the button for you. Let's say you want to put it. This wick's kind of gross. I'd probably just use the bodies for the mean threshold. So let's say you want to put a tick below the mean threshold. There you go. So it's all up to you and how you want to trade, how nitpicky you want to be with your entries. On a day like this, I'm not trying to have super tight stops. That's when my stop was, 69, and I made sure I bought or sold short in a premium. Let's see. How often are you gonna do these live streams? I like to do one like maybe once a week if people enjoy them. Especially when price action is nice and I can go over trades I took, because one, I enjoy teaching, and if you teach it, you basically learn it twice. Let's see. How do you use the inversion fair value gap if it hits stop loss and want to enter again the opposite? Okay, so you're basically asking, like, let's say you bought, and I keep using this example because this one tricked a lot of people up, so I'm gonna keep going over it. Let's say you bought like this breaker, right? Which also is I'm gonna keep that up there for you guys. Let's say you wanted to buy this breaker, right? And obviously it's a 5-minute chart, so you would easily just got knifed through. For me, I obviously was watching on the 1 minute, trying to find a reason not to trust it, because higher time frame, we're bearish, right? Even though we just took out a low, we've been taking out lows all week, dude. We've been taking out lows all week. So, like right here, yeah, we took out a low, came higher, but we respected this order block right here. And we also hit that new week opening gap right here. I know I'm kind of switching. Go on the 15-minute and reset it. New week opening gap. New week opening gap right here. So a lot of confluences. But how do you use the inversion fair value gap? Let's go over that. I know this is kind of a harder example because right here we did wick into it a little bit. So here's a 5-minute breaker, right? But let's say like even then, like you were looking to see if you want to buy bullish, right? I'm suspect on this move because I'm gonna go over it again because I kind of went over it fast. Right here we took out previous day's low, right? But on the higher time frame, on the daily, right, we have this level right here, which is the fair value gap fill, which is this dotted line right here. Let's just call it FVG fill. It's all about the narrative, right? You don't want to be buying long if your higher time frames are telling you we're going lower, right? And I know like this is pretty much my end of the day objective, right? I don't know when we're gonna hit it, but once we had this big move right here, I was like, oh, we're going for that. Even though we chopped into it, right, and it got wicked out, I still got a partial off here. So that's why you always take partials and pay yourself. But for an inversion for value gap, let's go back to the 1 minute. Zoom in here. I know it's really small, but you can get really nitpicky with it. So I'm looking, remember, yes, we had a market structure shift, but what happened when we went above this high? We came immediately back into this range right here. Immediately back in, right? So we deviate out of the range and we come immediately back into it. So that's not displacement, right? That's not there's no displacement there. There's no fair value gap, right? The price doesn't keep going higher and leave a breakaway gap or, any fair value gap or anything like that. It just comes right back in. So immediately I'm thinking, even on the 5 minute, right? I'm starting to see we close above, and then what does it do? It goes up a little bit, hits this 5 minute fair value gap right here. And then it wants to come back down. So I'm like, okay, that's not a good sign. And also you got to remember, what was this low? Where is it? Yeah. PDL, and we had the other daily low that I mentioned. I wanted to see a run through. Zoom out so you guys can see this daily low right here, right? That's another sell side level, and then this is my long-term objective. I'll make this one blue, or thicken blue, so you know. And we'll name this PDL. Right bottom. So previous day's low is taken out, okay? Then we take out this daily low over here, right? And it looks like support. Look at that. It takes it out, right? They bring it a little bit lower, and they create a breaker when it breaks here. But remember, we're bearish, right? So you're looking to see, does the PDRA support price and want to go higher? And the first PDRA I see right here is this 1 minute breaker. And does price respect it once it breaks it? No, it goes right through it. Okay, so there's one, right? There's strike one, because if you see 3 fail, you're probably going lower. Strike one, okay? What's the next one? This fair value gap right here. Does price respect that? No. Closes below it. There's strike 2. What's the third? This order block right here. Does price respect that? No. But you might say, okay, well, there's a volume imbalance here, okay? And you drag that out and say, okay, maybe on that candle, you're watching in real time. Remember, this is all, it looks like a time site, but let's be realistic. Let's say you see that volume imbalance and you say, okay, well, price hit this order block here on this last candle, and there's a fair value gap. I want to fill it in, and it closed above the volume imbalance. Okay, so what are you going to do? You can either A, trade against the higher time from order flow and try and go long after you see we didn't displace above this high, right? That's one of your telltale signs is you probably shouldn't trust going long here because we failed to displace out of this range, right? All we did was sweep the high and come back into it. So what you want to look for is we already have two strikes. Remember, this breaker over here failed. Strike one. This fair value gap right here failed. Strike two. So you're already thinking to yourself, okay, I'm skeptical of this retracement right here. Like I don't want to. I want to see, do we have strike three? And so what you have here is, you might say, okay, well, you have this order block right here that was supported before. See these candle bodies? Price rallies up, comes back to the order block, rallies higher, seeking buy side, and you say, okay, I'm looking for strike three now because if we fail, we're probably going to go lower. And you might say, okay, well, price, we closed above here, and you wait for the next candle, right? And we come down here, wick it, but it's still closing below this volume imbalance, right? And it created another volume imbalance. And then, we end up taking out the swing low right here, and that's a market structure shift to the downside and violate this order block and close below the mean threshold right here. See? And so the inversion fair value gap that you're asking about right here, see, price isn't supported by it. So inversion means what? Literally, it means opposite. So it's going to do the inverse of what it wants to do. And so instead of acting as a discount array, it's going to act as a premium array, and it's going to repel price, right? And it's going to, so you could sell short in there and maybe put your stop, let's say you sell right when it gets there. You put your stop maybe like above the order block high, above this high, maybe mean threshold of the body, whatever you're comfortable with, maybe even above, one tick above this fair value gap right here. Up to you, right? So let's say I wanted to put it above this high. Well, if you're targeting the low, it's not even a 2-hour trade. And I know we went over this, but remember what you got to do. Projections. Where does it want to go? Well, I can't get a 2-hour out of this trade targeting the swing low, but I can get a 2-hour targeting this, how far can it go if it breaks this low? It can go down here, and that's what it does. It hits it, stops. And so that's where you take it off. It's almost a 2.5-hour trade, risking 6 handles, making 13 or 15, sorry. So that's like a really quick entry right there. Like you have to know what you're looking for. You have to already know this is a suspect rally. We've already broken 2 PDE arrays to the downside, and we disrespected them. And so now you basically would have to know, okay, I'm short. This is a turtle soup, and that's where you have to know what you're looking for to enter here. But that's just one example, and that's why you see ICT. He'll enter on these levels that you might not think make sense, but you have to remember you don't know what he's thinking. Just like you don't know what I'm thinking when I enter a trade, and you don't know what these people on Twitter are thinking, why they got in. Like even right here, you can also maybe extend this fair value gap here, and it acts as resistance, right? So it's doing its job, comes back up, drops lower again, but then it busts through, right? So you almost have this confluence of fair value gaps here that it's respecting. And look at that, even closes, and the bodies are respecting the bottom of this one, and it dips into this one, this tiny one right here. So it's all about finding that confluence and being on side. The whole point of ICT is to get on side with where the higher time frame smart money algorithm wants to take price. Let's see. Am I going to do these in the future? And if you are, will you do them a particular time of day? Usually I'm not going to do them while I trade, at least not for now, because sorry, drinking water. I'm not going to do them while I trade, like live trading, just because I don't want to have chat open with that, and I honestly don't really feel comfortable doing that. But maybe down the road, and ICT's already doing that. Like, you don't need me to stream; just watch his stream. But if you're talking about lectures like these or like recaps, Q&A, I want to maybe try and do one once a week. I do this full time, so there's really no excuse why I couldn't. And it'd be nice to kind of be active on YouTube more. I know I just started this channel like a couple weeks ago, so it'd be cool to get some content on here and maybe do some like trader interviews. What I want to do is get like a friend that I know in real life, or like my dad or somebody, and try and teach him ICT from scratch, or at least teach him the basics live. And if you want to follow along while I teach him, then, you can see his progress. You can see, maybe hear ICT from like another source and watch him learn. And if he has questions, what I'm saying? Like, it would be cool to see like me try and teach one of my relatives or a friend that I know in real life these concepts. I'm glad you're enjoying it, Hannah. Thanks. He said there's an inversion gap at 944 to confirm the breakaway gap plus 5-minute volume bounce. 944. 9424. Oh, okay, here. To confirm the breakaway gap plus the 5-minute volume bounce. Yeah, you're talking about like right. Yeah, where I went short. And for those of you who weren't able to make it, I can show you my executions. There you go. Sold short right on that volume imbalance. Almost top ticked it. I think I was in like 2 ticks of drawdown. 2 ticks of drawdown, then it just went lower. So, and you got to remember, like, how can I narrow in my entries? Well, you don't want to sell short in a discount. You want to wait for it to come back up into a premium before selling short above the 50% volume imbalance. That's how you can narrow in these entries. And yes, we respect the fair value gap right here on the 5-minute. This candle's high, this candle's low to the tick. And yes, we respect this breaker high to low. Look at the bodies respecting the breaker. I'll make it purple. I know it's getting crowded. Let's take out the fair value gap. Respects the breaker to the tick as well. So, you can't argue with that. Yeah, that was the best setup on Friday, I think. I was done by, let's say I got in at 10, first partial at probably like 15 minutes later, 5 minutes later, 10 minutes later, whatever, after we rate this low. And then I kind of just got chopped out, and I said, you know what, I'm done. Yeah, and then we had some like nice range if you're on the 5-minute or higher, but 1 minute you probably got slaughtered trying to trade all these little like micro movements, and you probably thought every single little, like right here, if you went short right here, wicked out if you'd move your stop and then goes lower without you. So like that's just frustrating to trade in. So I got my piece of the pie and left. I'm not trying to get greedy. Let's see. Is the inversion the same for order blocks? I don't think so. Unless he introduces something. I saw someone in my Twitter comments saying that everything can act as an inversion, and I was like, I've never seen that before. So if I don't know something, I'm going to tell you no. But from everything I've studied, the only thing that can really act or basically be inverted is a fair value gap, whether it's an implied fair value gap or just a regular old fair value gap. Those are the only things I've seen be used as an inversion. Yeah, he's talking about breaker. So like the difference between a breaker though and an order block is like for a bullish order block, like right here. For a bullish order block, it's the last down close candle or a series of down close candles before the move higher. And we also have a fair value gap there, right? And so that for a bullish breaker though, you would be using the last the last up close candle, not down close candle. So bullish order block, last down close candle or series of down close candles. Last and for a bullish breaker, it would be a green candle, right? An up close candle. So like that's the difference. What would you be looking at right now with the futures open on ES? Oh, yeah, market did open, didn't it? I don't trade. You know, look at that. I want to trade that. I'm looking, like, even this was bad. That's even worse. But you do have a, let's see, new week opening gap, right? So if I go to my new week opening gap chart, and like, it's crazy. Let's go on like the 5 minute and look how price respects these levels, these new week opening gaps. Adam, if you're in here, maybe you could start using these. But like, look at, like, price comes up, consolidates inside of these, right? Resistance all up in these. Even comes down, hits CE, right? Almost looks like your typical inverse head and shoulders, right? And then, I mean, even on these little micro movements, these new week opening gaps are crazy. Like, boom, tick. Comes down here, comes up here, comes back down here, and it just chops around inside these, dumps off. So, but now we have a little small one right here. If you wanted to annotate it, it would be something like this. Make that red. Right? But, I mean, I guess I might as well just leave it on there, right? What are these? 3? Yeah. There we go. So there's the new week opening gap for this week that just opened. Oh, wait. No, sorry. I did it wrong. You're supposed to have the closing price. I'm a dummy. Opening price. Teach you guys wrong. So I'm going through it so quick. Opening price and then the closing price. There we go. So it'll be a little bit bigger than that. Boom. Okay, let's go through some more questions. What would I be looking right now? I mean, just the same. I would just still be looking at like the 1 hour. I mean, this just looks like a retracement to me. Let's go back to my actual chart though. Remove everything. Take off the executions. It's going like a 4 hour. Doesn't this look like sell side of the curve right here? Sell model, right? So I'm not looking to go long. Any long or retracement is suspect until we show a willingness on a higher time frame to displace maybe over the swing high as a daily shift, right? Because we've already made a shift right here. So what I'm thinking is like we could maybe like, and we've already touched in this fair value gap and didn't even reach 50%. So that's super bearish as well. We could chop around some. After filling in this order, you know, the order block right here on the daily order block and this fair value gap. You can see how price is respecting it. Hits it right here, goes up. Hits it right here, almost closes out of it. It fills it in, sorry, and hits this order block. And you know, you saw what happened on Friday. So maybe we just kind of chop in here in the beginning of the week. Because let's look at Forex Factory for this coming week. We got a couple orange folders. Nothing really except for like Tuesday at 10 a.m. Stuff just later in the week. And the week after that, you know, non-farm on next Friday. But like I kind of like a week where it's like a couple, maybe some orange and like a couple red folders throughout the week. And, you know, nothing too crazy though. How many people we got in here? 30? Let me know if the streams, I keep getting these warnings right here. This is my first ever stream, so if it's bad, let me know. I can probably try and fix some stuff. Everybody has different setups. Your entry was unique. Never tried that. Let me know what entry are you talking about? You're talking about the volume imbalance with the breaker on the 5 minute that I used? That's something that ICT showed in his live stream. He's like, how do I know where to buy in this fair value gap? Like, how do I narrow in my entries? Like, how do I know where to buy in here? Because there's, well, one, you want to wait for price to come into a premium on the swing. So there is 50% right here. OTE is up here, right? It doesn't even get to OTE, but you want to wait for price to come up into a premium. So this eliminates all this range, right? It eliminates, oh wait, that's the wrong thing. It eliminates all that, right? So you want to be buying above this red level, okay? So now you know, okay, well maybe let me just put your entry at 50 and you're fine. Or if you want to get really fancy like I did, look for something on this side, right? What's over here? Do we have any volume imbalances or fair value gaps like that could act as an inversion that were respected before? No, but what I do see right here is a tiny little volume imbalance. Okay. And look how it comes up and hits that. And that's, I entered right there at 65 when it enters into that volume imbalance. And if you go on the 1 minute, it looks even cooler. You know, boom, top tick basically. Let's show the entries. It's fun to show off, isn't it? Right there. So, yeah. It is a cool concept though to look, and you wouldn't have seen that though if you're just staring at a 1 minute or a 15. You have to kind of cycle around, right, and look for these, and then you want to narrow in. This whole trade, I didn't even look at the 1 minute to get in. I just said, okay, volume imbalance above 50%. I'm just gonna put a limit there and wait, and that's what I did because I was expecting. Remember, objectives already been met, taking out the lows right from the 8:30 news. I was expecting some chop. So I was like, I'm not even going to go on the 1 minute and waste my time trying to trade that. I'm just going to go on the 5 minute and sit after seeing this big move down. And does it want to create a fair value gap? And it did. So that's what I did. I just waited. And you could get impatient and say, how much time is between these candles this fair value gap forms? You got 5, 10, right? 15. After 15 minutes just sitting here waiting as it chops around, you could have gone short and been impatient and, you know, wanted to take out the lows or take out the daily fair value gap that I was calling for over here, right? This black line was the daily fair value gap fill. You could have got impatient and say it's going to run without me right here. Uh-oh, right? But you're not in a premium, right? You have to be patient. You have to trust that the algorithm is going to want to go back up and that smart money is going to reaccumulate in a premium and sell short again. And so that's what you want to do. You want to get inside with them, enter, and use these concepts to narrow in your entries and get that good risk reward setup, right? I know my stop was above this series of down close candles, the breaker, and I was trying to get that, right? Well, the first target was 1 tick below the swing low, and that's a 3.25R. And then I was trying to get the fair value gap fill for a 4R, and it ended up chopping me out after creating relatively equal highs. So Dylan Dunlaps would like to see you talk about the market structure shift at the 1058 candle. That's how I knew we'd start reversing. 1058. Oh, on the 1 minute. Okay. I need to get a mouse too. Every time I double click, it brings this up and my mouse keeps double clicking on its own. And it's sketching me out because if I want to hit, you know, market orders, it'll double buy or double sell, or if I hit close, it'll reverse my position, and I need to get a new mouse. It's gonna get me in like the wrong order, or buy like 10 contracts instead of 5 or something. 1058 candle. Let's go look at that. All the way back over here. So here's the fair value gap fill. 1058. That would be right here. Oh, okay. I see what you're talking about. This right here. This shift right here. Or even, I guess if you want to be like, if you want to get like super like scalpy, yeah. But for me, on a choppy day like this, you know, you could have said this was a market structure shift. Bought this fair value gap right here as it comes back into discount, and you would have been stopped out if your stop was here, right? Even right here, you could have thought this was, you know, a shift, or this was a shift. So you really got obviously we shifted after filling the objective of the fill, and look at the bodies respect that fair value gap on the daily. Like that's insane. But yeah, like this little, I probably wouldn't have considered this a shift unless it would be really aggressive. And we did kind of come back into like, I'll use this, the wick of this order block right here, right? But you did kind of come back into there, and you see price supporting it. So maybe maybe after a couple candles, you see price being supported by this PD array, this order block. Maybe you just buy long, as it's going up, or maybe on this down close candle here, market order, or just put a limit here, and if it comes back in, you get wicked in, and you get taken out, or sorry, you get to ride along with this ride targeting this high, then maybe this fair value gap here, right? So like if you're aiming for this, you might get a little scared thinking, okay, well I take partial here, take a partial here, and then you might think it's reversing on you. That's why you always pay yourself, maybe you move your stop here, you're fine, but you always want to pay yourself in case it does want to reverse here and not take this high yet, because it could have just engineered another double top and then went lower again and then finally taken it out like it did here with me when I got stopped out, right? You had these like equal highs, took me out, then boom, went lower. Same with these lows. Took these lows out, then went higher, and then took out this double top. And it was just seek and destroy all day before like 11 o'clock. But for me, I probably wouldn't have bought that, to be honest, especially after I made my profit. I would have considered this though a shift on the 5 minute, right? And then I want to look for, okay, well, what do I see? Like right off the rip, I see this volume imbalance right here, and I see this fair value gap. But if we're going from consolidation to expansion, like I said, you're not gonna want to. You want to see this be a breakaway gap. You don't want to see price come back into here, and so it never does, and it never gets the people a chance who are selling short here to get back, and offset their position. Because if it goes lower, they're just gonna sell and for break even, right? Because their stop's above here. So if it goes lower, they're just gonna sell for break even, right? Or maybe you never really know like what people are thinking, but that's the idea. The breakers, the wick is what I referred to as M5 UR. Okay. So we got equal lows and made a new low, which added a low confluence. Yeah. Like I said, it's all up to you. Like I'm not that aggressive. I used to be. But I've found that it's a lot easier and you get a lot less like stressful trades if you just kind of zoom out a bit. And yeah, you're right. Like you do have this breaker right here. I think we talked about earlier that supports price after sweeping this low right here. So yeah, that could have been like a telltale sign, right? That boom, okay, we've taken out liquidity here, these equal lows, and we've completed our objective. So yeah, there's like maybe two things right there that could give you some confidence. So yeah, if you're on the 1 minute and you want to scalp, like I just don't see a problem with that at all. It's just about how aggressive you want to be. Can that order block candle you just highlighted is also a breaker? I see it as a breaker. Talking about this one? Like, technically, yeah, like if you want to get really nitpicky, let's go on the 15-second. Like I know people who trade in the 15-second, right? What do you have right here? You have a low, high, lower low. This whole candle right here would be your breaker. Because you have the low being taken out here, right? And you finally get a bust, a market structure shift through that. And then right when price trades through it, you could buy right here. Stop below the breaker, stop below the low, whatever you're comfortable with. Depends on your risk reward and you're targeting this high. Let's say you just buy right on the top of the breaker and you put your stop either below the breaker candle, or maybe you want to put it below this fair value gap right here. So you're risking 2.5 handles to make 7.5. So that's a 3R trade, right? So you can get as nitpicky as you want, right? Like I said, oh shoot. That's the 15-second chart, but if you go back on the the 1 minute, you might not think that's a breaker, but it is because it took out the swing low right here on the 1 minute. And maybe then you would probably use this candle right here as your breaker, which also happens to be an order block, right? Make it purple to line up. And then you also have some order block confluence there too. that would help you out. So like I said, like there's a million ways to look at it. When everything kind of lines up like that and you have your objective fulfilled, you have liquidity taken and a shift, if you're trading the smaller time frames, like go ahead, do it. I'm more of a 5 minute trying to catch these bigger moves like here to here, or maybe something like here. And you could easily, catch let's say you get in like right here and put your stop at the low. If you want to target that high, go ahead. That's a 5-hour trade for 24 handles. But I was happy to get my piece of the pie, especially because you never really know if you're going to get range like this, especially when I saw this, So this is the first, like, for me, I wouldn't have trusted that just because, we've been chopping all day, right? And so we're getting closer to lunch, to 11 o'clock. Usually the move's done by like 11 or 11:30, so we could have just chopped here, but we did get a nice run here. But you don't really see that in hindsight. Sorry, you don't really see that in real time until it's happening. It's more of a hindsight thing. How do you know that the FEG is going to be a breakaway gap? Okay, I covered this earlier, but I'll do it again. But I'll do it quicker. You gotta remember, what is price doing, right? It goes from consolidation, or it starts in consolidation. It's gonna go from expansion, right? It can't consolidate the reverse, right? It can only go from consolidation to expansion. And as it's expanding, it can retrace, right? Or it can go to a reversal. And so we kind of already covered this. If you want to go back and look at the other parts of the live stream, but like, let's say it's consolidating. It expands, right? So what I said earlier was you have, and it's almost like a power 3 thing. Like if you could go sweep liquidity, right? That's the accumulation, manipulation, distribution, right? But it's consolidation and then it expands, right? So the opportunities are made when, and money is made when there's a change in the state of delivery of price. So when it switches from one of these conditions, when it switches from expansion to retracement, or from retracement back into expansion and goes higher. Oh shoot, wrong one. So consolidation, expansion, retracement, expansion again, and then maybe you hit a higher time frame objective and it reverses. So now you have a shift in market structure, right? And then you can have your fair value gap form and go lower. Now you have let's say like a fair value gap here, right? And you hit your higher time frame point of interest, right? So you take out liquidity and you create maybe a swing low for a shift, comes back up, and this would be like your low risk buy, or maybe this would be your lowest buy, right? It kind of depends on where you are in the sell model. Low risk buy, low risk sell if you're shorting, and then maybe you have, and that would be distribution, and then you have redistribution as it comes back in here and completes the sell model. If your accumulation is like down here, right, you would want to target your, but now we're getting to like market maker sell models and stuff, and you would target the original consolidation like that. So this is like when you see market maker, the what's his name, silver bullet guy, market maker trader, God, I forgot his name. I think that's his name. When he's talking about the silver bullet, right? The silver bullet entry, it's usually the last leg of the sell model or buy model, and it's the one targeting the original consolidation. So he's in, and so you see how it's kind of choppier right here, and then on the last leg you have the real move that, the more violent one of the leg down. It's always the silver bullet right here, or the last redistribution level of the sell model, and that's the silver bullet that he talks about, that he likes to trade. So maybe that's your model. Like maybe that's the only setup you take. When you see the sell model form, you only enter here and target original consolidation. Like that's all you need to make money. You don't have to trade breakers. You don't have to trade all these other things. Maybe this is your model, right? And so people just find what they like. What do you see the easiest? And I guess he sees that the easiest, and it makes sense because you already know you're in a sell model. You've already swept higher time frame. It's clear now right here, right? And you create this fair value gap. It's clear that you're probably gonna take this out. So it's the highest probability, right? And so that's why he trades it, and he does a really good job. Okay, we're getting to like about an hour and a half in. I don't want to make it this too long so people can go back and watch it. I'm not trying to be like ICT, be here for 2 hours. I think everyone has their question answered. Do you ever trade new week open in the market? The market open, yeah, I saw that. We actually put the new gap up on my chart. Market close, market open on Sunday. So now we have a new week opening gap. And so it looks like, and you know, equal highs here. Maybe you want to reach up and hit this gap. You know, who knows? Could continue filling in this fair value gap here that, you know, we haven't filled in yet. So maybe that's what it wants to do. And now you actually will have this phantom trend line, all this liquidity right here. So maybe it wants to come up here, sweep these highs from people going short over the weekend, fill in this liquidity void from these big down close candles, and then maybe reverse off this gap and maybe either go lower down here. Who knows? I'm not trading it though. I don't trade until 8:30 in the morning, New York. I mean, you do kind of have this broadening formation, but I don't really think we hit this high. We could, because we did. If you think about it, come off this. What's the daily bias? Remember, you got to start in the higher time frames. Don't get locked. Don't get lost. Hit this order block. So maybe it does want to come up, and you have this volume imbalance here. It could tick into like maybe something like this. Who knows though? Maybe it wants to hit CE of the wick. You never really know, because I mean, a lot could happen between now and tomorrow morning when I want to trade. So it's all and that's why ICT, he's like, I don't even look at the charts on Sunday. It's family day. There's really no point unless you want to trade now. But I mean, I get my itch scratched when the market opens on Monday. Which drawing tool do you use to draw the new week opening gap with CE? So I just use lines, the rays, and then this is just a fib, right? And I have premium discount, you know, in color, projections, and then I have like optimal trade entry, and then I have the consequent encroachment / mean threshold abbreviated. And that, all that does is just a 50 by itself, nothing else. It's just the 50. And then if I want, I'll make it red. And that way I can easily, you know, mark out a constant encroachment of a wick. I can do new week opening gap, right? Things like that. It's just cool. Like, I can show you my settings if you want. It's just that. It's really just a 50 that's red. And I extend the line all the way to the right. I don't use any indicators. The only indicators I have on here are the DR, IDR, which, you know, I'm kind of using less and less of. Because in the end, it really is just like the opening range ICT teaches. And I don't know. I won't get into all that. But and then I have the boxes, right? And this is an indicator by, I think it's Infinity Trades. But it shows you, like, here's how I knew. Like, look at this. Search and destroy. Like, if you go back here, search and destroy with the daily highs and lows you mark out each day. But the boxes, I have them kind of altered a little bit. They're not, it's a little bit extended for each session. Like, it's a little bit larger than each session actually lasts. But I like it like that because I can see, you know, what are we taking? We take out Asia's high with London both times. So what does that tell me? This day is probably going to be choppy and search and destroy-ish. Or sorry, seek and destroy. Been playing too much COD. You know, we sweep both highs. And then what do? We sweep the lows of London down here on Wednesday. So what's it probably going to do? Well, if it's search and destroy conditions, it's probably going to want to go up and reverse. So that's what, you know, it just helps with the visuals of looking at each session, each kill zone. You have Asia, London, New York open up until 11:30 is when I cut mine off. But if you want the settings for these, I got them from T-Trades. And here's the indicator. It's called Futures Exchange Sessions 3.0 by Infinity Trading. Just look up this right here. And then screenshot these settings. And if you want to, you can go back and replay these. I'm just going to run through them real quick. Just a couple. That's basically it. But yeah, I just kind of toggle this on in the morning and see like what's going on. Just a quick snapshot, and then I'll really deep dive into like my analysis. But it's just another visual like aid. So, all right. Well, let's see. Any more questions? Share any indicators. Could you use a parallel channel for me? Yeah, you could use. Oh yeah, you can use those. Yeah, what I'm waiting for is them to add just like a fib inside the box, where you can just toggle a fib on and off with like text instead of having to do this and putting it like in the center inside. You know, like now you have like a fib inside your box. I'm waiting for them to add like fib levels inside a rectangle that you can just toggle on and off, you know, for CE. And maybe have like quarters already marked out with different styles of lines. Like have one line that's like fatter than the other, one that's dotted, you know, things like that. That would be nice if they had that, but it's kind of a niche ask because, you know, only people who really care about that stuff, I feel like, are like ICT traders. Okay. Well, I gotta eat dinner, and I think this is pretty much all I wanted to cover. For those of you who stopped by, thanks. We ran over a little bit, but I expected to because, you know, we were answering questions and stuff. So I'll try and keep these shorter, less than 2 hours. And I know you guys got lives too. So we'll try and do these maybe once a week if I have time. And maybe bring some questions for the next time we do one of these. But tell me, you know, hit me up on Twitter what you enjoyed, maybe what you want to see more of, and if the quality of the audio is bad. Can you guys go ahead and tell me real quick though, how's the audio quality on the microphone? Is it good? Did you like the intro that I had? If you missed it, don't miss it again because it's kind of badass, and there's like some symbolism behind it. So you can go back and watch it maybe at the beginning. But I will let you guys have a good night, and I will catch you guys later. Peace.